China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with its trading partners if the status quo is allowed to continue. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand.
On May 26, 2025, China ordered an increase in the proportion of trade transactions conducted in the renminbi from 25% to 40%. Did you know? This means that $6.1 trillion in global transactions are beginning to move away from the US dollar. This is truly a turning point that has shocked the entire world. D-Day, May 26, 2025, China changes the global rules. On May 26, 2025, what seemed like a small decision shocked the world. China ordered banks to raise the share of trade transactions conducted in renminbi from 25% to 40%. Can you imagine? $6.1 trillion in global transactions began shifting, elevating the renminbi to a new status, directly challenging the reign of the US dollar. But China isn't just changing numbers. They're building a new future focused on high technology, artificial intelligence, robotics, semiconductors, the key industries to lead the 21st century economy. Moreover, they're expanding production and domestic consumption, determined to price exports in renminbi, creating a self-reliant value chain no longer dependent on the US financial system. Imagine this: a nation not only wanting to be the world's factory, but also determined to become the master of global finance and technology. How will this reshape the economic game? Are you ready to explore this transformation with me? US tariffs backfire. How China is leveraging to surpass. Did you know that in the first quarter of 2025, the share of payments made in renminbi surged to 30%? This is no small figure. It reflects massive capital flowing into China, while demand for US bonds continues to decline. More notably, countries like South Africa, Iran, and Brazil are proactively using the renminbi to bypass US sanctions and restrictions. This signals a significant shift in the global financial landscape happening faster than we imagined. And what about the US tariffs, reaching up to 145%? Do you think they would slow China down? Far from it. Those sky-high tariffs have only accelerated China's exports, especially in heavy machinery. They cut product prices by up to 50% and cleverly signed contracts in renminbi to dodge tariffs, gaining a strong competitive edge internationally. Are you surprised? Are tariffs still the shield protecting the US economy like before? Or are they unintentionally pushing partners and markets into China's embrace? The new financial system, will the renminbi replace the US dollar? China is quietly building an interbank payment system called CIPS. Did you know? This system is increasingly trusted by many countries because it enables faster, cheaper transactions and, most importantly, reduces US control. But that's not all. China is expanding trials of a digital currency in special trade zones, enabling quick payments that are harder for Western financial authorities to monitor. This is a strategic move to build a parallel financial ecosystem nearly independent from the US-dominated traditional system. So, what are the long-term consequences? Declining demand for the US dollar will suffocate the US bond market and tighten capital flows to Wall Street. China is gradually creating its own financial system, preparing to replace the dollar's central role. Can you imagine a future where the renminbi becomes the global financial hub? And how will the US react when the dollar's king status starts to shake violently?